The trap does not look like a trap. It looks like relief. It looks like a calm voice on the financial channels telling you the excitement is over. The rally has run its course, and a sensible person takes the win and steps aside. And if you are a gold owner right now, that is the exact moment you need to be most careful, because the people telling you to let go are the same people waiting to catch what you drop. So let me answer the question in the title before I prove it, because you clicked to know if you are walking into something, and you deserve a straight answer instead of 10 minutes of buildup. Yes, there is a trap being set for gold owners, and it is not a market crash and it is not a scam email. It is subtler and older than that. The trap is being talked out of your metal at the bottom of a shakeout, right when the strongest hands on earth are quietly buying. And the tell that the trap is live is simple. Gold pulled back from its records, the headlines got calm, and the very institutions that supposedly do not care about gold have spent the last several years buying more of it than they have in generations. That gap between what they say and what they do is the whole story. Here is the fact I want you chewing on before we go one step further, because it is the reason this pattern works over and over. Real bottoms are not made when everyone is scared. They are made when the seller has been convinced that selling is the smart, mature, responsible thing to do. Fear you can feel. This is quieter than fear. This is a nod of agreement as you hand over the one asset that cannot go bankrupt, cannot be printed, and cannot be frozen by anyone. The trap works precisely because it does not feel like danger. It feels like good judgment. Let me take you to the cleanest example of this ever recorded. And it did not happen in some ancient empire. It happened in a modern, sophisticated, respected financial power run by serious people in nice suits near the end of the 1990s. The United Kingdom, one of the oldest financial centers in the world, decided to sell off roughly half of its national gold reserves. And here is the part that turns a decision into a lesson. They announced it in advance. They told the entire market exactly what they were going to sell and roughly when. They telegraphed the whole thing. Now think about what that does. If you are a large buyer, a patient buyer, and a seller stands up and says, "I will be dumping a large amount of gold over the coming months," what do? You do not rush. You wait. You let the announcement itself push the price down, and then you buy the metal at the lower price the seller created for you. That is exactly what happened. The pre-announcement drove the price into the ground, and the sales went off near the lowest leveled gold would see for an entire generation. Within a few short years, the price had multiplied several times over from where they let it go. The gold they sold to look responsible went on to become some of the most expensive regret in the history of central banking. People in that world still have a name for that low. They named it after the man who made the call. It became the byword for selling the bottom. I have spent a long time in the gold and silver world, sitting across from ordinary people trying to protect what they spent a lifetime earning. And I will tell you the thing that episode teaches that no chart can. The mistake was not greed. The mistake was the desire to look prudent, to be done with the volatility, to hand the uncertainty to someone else and feel grown up about it. And that same feeling is being marketed to you right now, dressed up as taking profits off the table. So who is on the other side of your sale? Follow the money, because it points at the enemy in this story. The big banks and the trading desks do not make their fortune predicting the future. They make it on your churn, on the spread, every time a nervous holder decides to get out. A frightened owner selling metal into a pullback is not a victim to them. He is a customer. And the financial media that keeps you comfortable and calm is not lying to you exactly. They are just never going to be the ones to tell you that the smartest, most patient money on the planet loves nothing more than a well-behaved seller who has been talked into thinking the party is over. Now here is where it gets strange, and this is the part the calm voices leave out. While the story on the surface is that gold had its moment and is cooling off, look at who has actually been accumulating underneath it. The central banks. The same institutions whose entire job is to manage a nation's money have been buying gold at a pace the world has not seen in generations, adding well over 1,000 tons a year for several years running, roughly double what they were doing the decade before. And gold recently passed a milestone that should have been front-page news everywhere and was barely mentioned. It quietly moved past the euro to become the second most held reserve asset by central banks on Earth, behind only the dollar. Read that again. The professionals who run the money are not selling gold to take profits. They are trading their paper currencies for it. And that is not even the biggest piece. Ask yourself why the buying accelerated when it did. A few years ago, one of the largest powers on Earth had a substantial chunk of its official reserves frozen overnight in a geopolitical dispute. Not seized in a war, frozen with a keystroke, because those reserves were somebody else's paper promise sitting in somebody else's system. Every finance minister and central banker in the world watched that happen and drew the same conclusion at the same time. The money you hold as a promise can be switched off. The gold you hold in your own vault cannot. It has no counterparty, no login, no politics. That single lesson lit a fire under official gold buying that is still burning, and you will not hear it framed that way on the evening business report. Let me name the honest caution here, because I would be doing you a disservice if I only showed you one side. And trust is the whole point of a conversation like this. Gold does not go straight up. It has had brutal, stomach-turning drops even inside its greatest bull markets. In the middle of one of its most famous decade-long runs, gold nearly cut in half before it went on to multiply many times over. A shakeout can be real, it can be sharp, and it can last longer than you think you can stand. I cannot tell you the day this pullback ends, and I would not insult you by pretending I could. Anyone selling you a precise date is selling you something. What I can tell you is the difference between the people who got hurt and the people who got rich in every one of those episodes. And it comes down to one thing: whether they were forced to sell at the bottom or chose to hold through it. The trap is not the pullback. The trap is being maneuvered into selling during it. And this is exactly the moment I want to talk to you directly, because everything I just described about protecting what cannot be frozen or printed is not an abstract idea. It is a decision sitting in front of you right now. If you have $100,000 or more in a 401k or an IRA, most of it is probably parked in paper, stocks, bonds, dollars, promises. That was fine for a long time. But we put together something for people in exactly your position called the Retirement Wealth Protection Guide, and it is completely free. It walks you through how retirees are diversifying a portion of the retirement account they already have into physical gold and silver, without taxes and without penalties, using a structure built for exactly that. If you are watching this on your television, just scan the QR code on your screen. If you are on your phone or your computer, go to readfamilyguide.com. This is not just for insiders or the wealthy. If you have $100,000 or more in any retirement account, this is for you. From our family to yours, no obligation, nothing to buy. And let me give you the fact that made me want to put that guide together in the first place, because it is quieter and stranger than anything happening in gold. For several years running, the world has used more silver than it has produced. Every year, the shortfall gets covered by pulling from above-ground stockpiles that were built up over decades, and those stockpiles are being drawn down. Here is the cruel twist that makes silver different from gold. Gold gets hoarded and sits in vaults, but silver gets used and destroyed. It goes into solar panels and electronics and medical devices in tiny amounts, dispersed so thin it is uneconomical to ever recover. So the metal is quietly disappearing while the world tells itself there is plenty. When a market runs a deficit that long, the reckoning does not announce itself politely. It shows up all at once. Now watch what happens when you put the silver picture next to the gold picture, because in this recent pullback something revealing occurred. When the safe haven fear came out of the market, silver fell harder than gold. The gap between them widened. And to someone who has watched these metals for a long time, that is not a reason to run from silver. That is silver going on sale relative to gold at the exact moment its supply story is tightening. The crowd sees the bigger drop and feels vindicated for staying away. The patient buyer sees a discount on the metal with the worst shortage. Same fact, two completely opposite reactions, and which one you are depends entirely on whether you understand the mechanism or just watch the screen. Let me show you why the screen itself is part of the trap. Most of what trades as gold and silver every day is not metal at all. It is paper, contracts, claims, promises to deliver that are bought and sold far more than the actual metal that backs them. Many more claims exist on paper than there is deliverable metal sitting in the vaults to satisfy them. That works fine as long as almost nobody asks for the real thing. But it means the daily price you see is set largely in the paper market by traders moving contracts. And that price can be shoved around in the short term by forces that have nothing to do with whether the metal is scarce. We have watched a single set of margin changes on the exchange knock a metal down sharply in a matter of days, while not one thing about its actual supply had changed. So when you see a scary drop and your instinct says the market is telling me something, remember that the market might just be telling you what the paper is doing, not what the metal is worth. And here is something that should stop the calm voices cold, because it breaks a rule they have leaned on for years. Gold is supposed to struggle when the Fed is tough on inflation and the return on safe paper stays high. That is the old textbook relationship. When holding cash and bonds pays you well, the metal that pays no interest is supposed to fall out of favor. Yet through this recent stretch, with a divided Fed talking tough and even floating the idea of tightening further, gold has held near its records instead of collapsing the way the textbook says it should. That is not noise. That is the market quietly telling you the old rules are breaking, that something structural is pulling gold up underneath the day-to-day fear, and that the people running the money see a reason to own it that has nothing to do with what interest rates do next. When an asset stops obeying the rule that used to govern it, pay attention. That is usually the first sign that a bigger force has taken over the wheel. Here is the part that hits closest to home, and I want you to picture a real person, because this is where the history stops being about foreign governments and starts being about you. Think about a retired machinist in Michigan. Call him one of the millions of Americans who did everything right. He worked 40 years. He never missed a mortgage payment. He saved into his retirement account like they told him to. And now he watches the financial channels every morning trying to be a responsible steward of what he built. He bought a little gold a while back because something in his gut told him to. And now that same gut is being worked on every single morning by a calm voice telling him gold has had its run. Be sensible. Lighten up. Take your profit. He is not being scared out. He is being reasoned out. And if he listens, he will do exactly what a whole country did near the end of the 1990s and hand his metal to a patient buyer at the low, feeling mature and responsible the entire way down. That machinist is not foolish. He is being handled. And the thing that would protect him is not a hot tip or a price target. It is understanding the mechanism so that when the calm voice tells him to sell, he hears it for what it is. Because here is a principle worth more than any forecast. The goal is never to be a forced seller. If you own gold, own it in a form and a size where a shakeout cannot pry it out of your hands. Do not put in money you will need next year. Do not buy a paper promise when you can own the metal itself. Size it so that when the price drops and the calm voices get louder, you can sit perfectly still. Because the entire game the strong hands play depends on shaking loose the people who cannot afford to hold. Take that ability away from them, and the trap has nothing to close on. Let me pull the thread all the way back to that British episode, because there is a detail in it that ties everything together. The sales were announced in advance, and that pre-announcement is the whole mechanism in one word. The trap is always telegraphed. The market is being softly told over and over that gold owners should be thinking about the exits. That is the modern version of standing up and announcing you are going to sell. The patient buyers hear it, and they wait, and they let the sellers walk the price down for them. You are watching the same movie, only this time the seller they are trying to recruit is you. And this is the recognition moment I want you to sit with, in your own words and your own situation. The people who run the money have already positioned. The central banks are buying. The largest, most sophisticated pools of capital on earth quietly traded their paper for metal while the story on television stayed calm. The crowd, the pension funds, the ordinary savers being told to take profits have not moved yet. And by the time gold is leading every newscast and every advisor in the country is suddenly recommending it, the easy part of this will be behind us, and the patient buyers will already own what they wanted. No announcement goes out when the smart money has finished accumulating. The buying just quietly stops, and the price is already gone. The whole edge is insane yet while it still looks like the boring, cautious thing to ignore. That window is open right now, precisely because nothing feels urgent. That is not a coincidence. That is what the moment before always feels like. So let me bring this home and give you the honest reason to act while it is still cheap and reversible to think about. This decision is at its easiest exactly when it feels least necessary, when the headlines are calm and gold has pulled back and no alarm is going off. That calm is the window, not the all clear. If you have $100,000 or more in a retirement account, the free Retirement Wealth Protection Guide walks you through how to diversify a portion of it into physical gold and silver without taxes or penalties, protecting not only what you built, but what your children and grandchildren will one day inherit from you. And for those of you who watch this all the way to the end, mention that when you reach out, because we also offer a free one-on-one educational web conference for viewers with 100,000 or more who want to walk through their own situation with a real person. If you are watching on your television, scan the QR code on your screen. If you are on your phone or your computer, go to readfamilyguide.com. From our family to yours, no obligation and nothing to buy. Because in the end, the trap in the title was never a crash. It was a whisper. It was a calm, sensible voice near the end of the 1990s telling a serious country that letting go of its gold was the mature thing to do. And that same voice is talking to you this morning. The people setting the trap do not need you to panic. They just need you to feel reasonable while you hand them the one thing they cannot print. Do not be the machinist who got reasoned out at the low. Understand the mechanism. Hold what cannot be frozen or printed, and let the patient buyers wait on somebody else. The trap only closes on the seller who walks in. You do not have to be in.